Good morning, everyone, and thank you for joining us today. Really, the attention really has to focus in on the UK, much as it has done over the past probably 4 weeks as we've been discussing really the actions of the government that have effectively caused the challenges that we saw within the bond market, or the gilt market as it's known here in the UK. Significant changes in interest rate expectations and also the challenges that it's brought for the fiscal position of the country, not to mention how mortgage costs have changed quite significantly over that period of time as well. Really, the decision of Liz Truss to resign yesterday, marking, as we've all been able to read, that shortest prime ministerial career that we've seen in the UK, is quite a significant event. But what it does also show quite starkly is the strength of markets and the power of markets to force change when the direction of travel, or the intended direction, is not fiscally sustainable. And really that's what we did see with that mini budget on the 23rd of September. So a lot of events over the past 4 weeks, culminating in the Prime Minister's decision to step aside yesterday. Looking to the future, we'll know who the new Prime Minister will be in a week's time. Really one of the things that I find really quite surprising is that we'll have 3 Prime Ministers in the space of 8 weeks by the time we get to next Friday. So significant amount of change, but really the economic backdrop remains the same. The markets want to see the ongoing fiscal response that the new Chancellor has set out, alongside a plan that speaks to the fiscal sustainability of the position of the UK. And that will be crucial over coming days. And indeed, when we look at how the market reacted to the news yesterday of Liz Truss resigning, there was very little change. The market's forward-looking. The market has set in view a chain of events which the Chancellor has started to deliver upon. So important that we just see that stability coming through from the financial management of the economy in the coming weeks and indeed months. The other things that I wanted to touch on today is just 2 things, looking at one, the strength in the US labour market. We had weekly unemployment claimant numbers yesterday, and they declined versus an expectation of an increase. And really that speaks to that ongoing strength that we've discussed over recent months in both the US, but also here in the UK labour market as well. Certainly something that will give the Federal Reserve probably confidence to continue with that trajectory of significant and large interest rate increases that we're expecting to see over the final 2 months of the year, with 0.75% expected at their next meeting. This morning, a couple of things just in the UK. Retail sales data for the month of September really just highlighted that ongoing challenge that we've been discussing in recent months in terms of a slightly weaker backdrop for retail activity. And indeed, the Office for National Statistics within that highlighted the challenge that inflation is having for retail volume. So higher prices, as we all see in the shops, curtailing purchases, and that's certainly very evident. The only other thing that I wanted to mention was that we saw yesterday a speech by Ben Broadbent, the Deputy Governor of the MPC, really setting out his thoughts on the economic direction over the coming years, and indeed how the lagged effect of monetary policy, i.e. interest rate increases, will impact the real economy. And crucially, he concluded at the end of his speech with a view that really official interest rates may not have to rise quite as much as the market is currently anticipating, given that lagged effect. And that's something I think is very notable, and something that we certainly will be paying attention to as we move into the MPC meeting on the 3rd of November. We'll have a lot more to discuss later on today with our Do More With Your Money show, so please do tune into that, where we'll be discussing the situation with the Prime Minister and the change there. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.